Hello, everybody. Welcome to the Appcast brief. Super happy that you're joining us today. I'm Julius. I'm the European labor economist dialing in from London. I have two colleagues with me here today, Josh and JC, who can maybe briefly introduce themselves. Josh, do you want to take it first?
Yes, thank you, Julius. I'm Josh Previte. I'm an economic data analyst here at Appcast. I'm a part of our data and insights team. You've seen me a few times before on the Appcast brief, and I'm happy to be back.
Awesome. And I'm JC Perez. I'm a solutions engineer on our strategy team. Looking forward to diving into the importance of the candidate journey.
Sounds good. We're going to talk first about the labor market data that came out today. And so I'm going to be doing that for about 10 minutes, and then I'll hand over to Josh and JC. Josh, do you want to share our presentation? So if we just go to the second slide. So as I said, I'm going to do the labor market update first. Josh is then going to talk about recruitment, doing a recruitment and marketing deep dive. And JC will talk about the journey to hire. So let's talk about the labor market data that came out today. If we go to the first slide, you will see that the US economy added 270,000 jobs this month. And so this number beat expectations by a lot. Expectations were about 180,000. So we have kind of another blockbuster US jobs report. And if this is not your first time, but you've followed us and you've been on these briefs a few times before, then maybe you might notice that we have been saying this quite a lot, that job numbers actually beat Wall Street consensus expectations. So either you can then take the guess that economists maybe are not super good at their job forecasting the jobs report, or maybe something else is going on, and maybe it's the second thing, and I'm going to talk about that in a bit. But so first key point, very good jobs report, much better than expected, 270,000 jobs added. If we go to the next slide, this slide is showing us that it is our estimate between labor demand and labor supply. And so the upper line is total labor demand for the US economy, and the lower line is labor supply, which is the available labor force. And so since 2021, when we recovered from the pandemic, labor demand has exceeded labor supply a lot. That gap was the highest about 2 years ago. The jobs market was super hot, but now the gap has been coming down a tiny little bit. And so if we go to the next slide, the reason why the job market is normalizing is because total vacancies, the total number of job openings, has gone down from about 12 million to about 8 million. Yes, so we have still very good job growth. We have a very healthy economy, but the labor market is going from super hot to normal in the sense that there are less job openings than 1 or 2 years ago. Hiring has gone down, especially for white-collar jobs. Actually, total hires has gone down and is normalizing and is going back to pre-pandemic levels. Yeah. So that's kind of like the key takeaway. Very good job growth, but hiring is slowing compared to last year and compared to 2022. If we go to the next slide, you can see in this slide the long-run unemployment rate. And we took this graph all the way back to the 1950s. And the lower pane, these spikes, is showing you the number of months the unemployment rate has stayed below at 4%. And we are now reaching 30 consecutive months of a very low unemployment rate. The last time we saw that was in the 1960s. So a very good job market. However, the unemployment rate also increased from 3.9 to 4%. And a year ago, the unemployment rate was actually closer to 3.5%. And so now you might want to say, hang on a minute, you just told me that job growth is super, super high. How come the unemployment rate is actually still ticking up? And so the only reason or the only way we can square that is actually if we assume or if we look at the data and say that immigration over the last year has far exceeded estimates. And so there's a lot of estimates out there. Some people or some institutions say maybe 1.5 million people migrated to the US last year. But the CBO estimate is actually at 3 million. So there's a lot of uncertainty around this. And so the only way we can square that job reports have actually beaten expectations month over month, almost over the last year, and unemployment rate is rising at the same time, it is because immigration and probably also illegal migration has actually increased significantly. So the US economy is creating a lot of jobs and doing well because of migration, actually. If we go to the next slide, you can see that the labor force actually continues to grow. The prime age labor force participation rate is what we look at because you want to look at the younger demographics. If you look at the labor force participation that is not prime age, then you would see a downward trend just because of an aging population, actually. But the prime age labor force participation has increased a lot and is basically at its highest since the early 2000s. Yeah, so a very, very healthy job market. Lots of people are working. It has just gone up over the last 2 or 3 years. Yeah, next slide, please. If we look at wage growth has actually ticked up a tiny little bit. So that is a little bit of a concern for the Federal Reserve because they just want to have this number come down. It's probably a little bit too high to be consistent with their inflation target. And they need to see lower numbers on the wage front. And so markets actually now expect that the Fed might only lower interest rates once at the end of the year. And so that means continuously high interest rates above 5% for the rest of the year because wage growth just remains too elevated, too high. Next slide. If we look at job growth for different sectors, we can see that the education and health services are adding a lot of jobs, close to 70,000, leisure and hospitality, 40,000. Construction continues to add jobs, 20,000. So education and health is adding, or is one of the sectors that has been adding the most over the last year. But if you look on a sectoral basis, it's basically almost all sectors that show decent job growth. So again, a relatively strong job market just across the board. And if we dig a little bit deeper and have a look at the next slide and just look at the jobs created industry by industry, you can see over the last 2.5 years, healthcare employment has basically increased at a rate of like 60 to 70,000 jobs each month. Yeah, so very strong, very healthy job growth and just continues month after month without even slowing down over the last year. So that's probably in terms of just like net job creation, the sector that is adding the most jobs. Yeah. And so if you look at other sectors, next slide, you can see that leisure and hospitality is still also adding jobs. Obviously, the sector recovered the most during 2021 and 2022 in the 2 years following the pandemic. But even as we speak, it's still adding some 30 to 40,000 jobs each month. Yeah, so the 3-month moving average is just under 40,000. And next slide. So 2 more sectors. Warehousing is one sector where we actually see that a lot of jobs have been lost, or some jobs have been lost throughout 2022 and 2023. So that is one of the very few sectors that is seeing weakness. It recovered very strongly in 2021 and then saw 2 years of kind of like small job destruction, but now has been adding some jobs over the last couple of months again. So probably the weakness will not persist any longer. Yeah. And the last sector we might want to look at is actually construction. Very interesting. If you had asked me 2 years ago, what high interest rates, what would that do to the construction sector? I probably would have said, yeah, if interest rates go up all the way to 5 or 6%, that's not good news for the housing market, not good news for construction. But here you can actually see that the economy has remained extremely healthy, and the construction sector has also continuously added jobs, and we are adding jobs at a pace of about 20,000 jobs per month on average over the last year as well. Yeah. So again, very good job creation. Manufacturing is also adding some jobs. I think we should, yeah, that's the last slide. I think we should hand over to you now, Josh.
Awesome. Thank you, Julius. So in my slides, I'm going to talk about how some of these macro level trends are affecting recruiting benchmarks. And so I focus mostly on cost per application and apply rates. On my first slide here, overall cost per application by month for your long ATS applies. And so when we compare May cost per application to April, it was about the same level. In May, we're currently $18.98, up about 20 to 30 cents from April. Another thing that we typically look at is apply rates. And just to reiterate from previous Appcast briefs, but apply rate of the job seekers who are clicking on a job ad, how many are going to complete that full application? And in May, it was about 3.82% of those job seekers, which is above April levels. However, we're still below those late 2023 levels, and that's certainly contributing to the higher cost per application. One thing I did want to note is some year-over-year trends. So I think this is a story we certainly hit on in the past, where we've seen lower cost per application in 2024 compared to 2023, and certainly compared to 2022. However, as we're progressing further into 2024, we're seeing the gap shrink. So what was once, $3, $4 is now $1.50. So we're still, again, seeing those 2024 CPAs start to climb again, and that's starting to match what we were seeing in 2023. Not there yet, but it's likely coming. And then on the flip side, from our long or ATS applies, we have our easy applies, where candidates can fill out the resume and just click a few buttons to apply. Using those apply processes, we actually saw a pretty substantial increase in cost per application in May. That's $5.50 in May. That was about $1, a little more above from April levels, but definitely something to watch moving forward. When we look at apply rates for these easy applies, it also increased, and this has followed the trend of the last few months, certainly in 2024. We're currently sitting at 21.5%. Again, a trend we've seen pretty much since the start of the year. Awesome. Now getting into some industry data. I'm going to focus for the rest of the slides mostly on those long ATS applies. So looking across these different industries, how have we seen cost per application trend since April? And I think this follows a pretty similar trend to what Julius was just saying. These standing up jobs, what maybe you've traditionally thought of as the hourly industries, construction, food service, manufacturing, are all seeing, again, pretty moderate growth in cost per application in those recruiting costs. And on the flip side of that, a lot of those sitting down jobs, those jobs you need a computer for, we're continuing to see declining recruiting costs. I'm looking at sales, technology, insurance. For me, the obvious outlier here is healthcare. we've talked about in the past how healthcare has been pretty resilient in terms of its cost per application, where other industries have seen a pretty substantial decline over the past few years. Healthcare cost per application has not seen that. However, now we've seen a few consecutive months of decline in cost per application. So it's definitely something to look at, and something I'm looking at every day. And I'm seeing this mostly in nursing positions. So a little more to come on that later. But again, 5% is nothing to worry about, but definitely a trend that I'm interested over the next few Appcast briefs. If we go by geography, we can see cost per application changes from April. And we look at some of these states that are increasing in cost per application from April. Those are mostly mountain region states: North Dakota, South Dakota, Wyoming, Idaho. I don't think it's a secret to anyone here that those are typically pretty hard to hire states. Obviously, not a big population there, especially if you're looking for those skilled workers. Something where I'm also interested is California had a cost per application. Obviously, there's a lot of population, there's a lot of jobs there, certainly can influence that aggregate cost per application level. The rest of the country, though, a slight decline typically in those cost per application. And then going into specific job types here, again, comparing May cost per application and its percent difference from April. Again, pretty similar to what you would expect here. Customer service representatives was actually one that maybe did surprise me a bit, 10% increase in cost per application. Warehouse associates, the stock clerks have gone up a bit. Cooks, restaurants are following pretty similar trends to their larger industries there. But again, the ones I really want to focus on here are those no-string positions down at the bottom. Registered nurses saw cost per application decreases of almost 3%. LPNs were there too, and nursing assistants were even closer to that 5% mark that we were seeing across healthcare. And then I did just want to provide the bigger picture here on a few of those job types, because I'm telling you about month-to-month trends, but it is important to put it in the context of the previous years as well. So for the first one I have here is CDL drivers. I talked about how cost per application has gone up. We're currently sitting at $20.98, higher than those February levels. But we still have a long way to go if we're ever to get back to those 2022, 2023 levels. So yes, we're seeing things turn around, but we're just not nearly at those levels of previous years yet. Software developers, I know we touch on this quite consistently, but did want to quickly touch on that it was a pretty, again, moderate to substantial growth in cost per application, where cost per application is now at $17.58, and that's a pretty stark rebound from what we were seeing in the beginning of 2024. Those customer service representatives did talk about them a little bit, but we're currently sitting at $10.95, again, up from where we were, but not close to those $20 cost per application we were at the end of 2022. Then, of course, you have your registered nurses here as well. So if you look at that black line, you can see what I was just talking about. That's your moving average. We're seeing those costs per application for those registered nurses overall start to come down. Not nearly to the extent, again, that I was just showing on many of those other job types, but it is coming down, which is certainly something to note. And with that, I will pass it over to JC.
Awesome. Thanks, Josh. All right, so with a grasp on the current sentiment of the market, let's dive into the importance of creating a holistic experience throughout the candidate's journey to the hire. Go to the next slide. So I'm sure a large portion of you have seen similar funnels in the past, but it's important we start here and run through it briefly. The biggest quality is that a candidate doesn't necessarily have to start at the top of the funnel. Current employment status and overall happiness at said employer plays a huge factor as far as where they're falling within it. But for the example, we're going to assume that the candidate is starting at the very top. So first, the candidate becomes aware of a company and its open positions through various channels such as job boards, social media, company websites, maybe even word of mouth. The interested candidate starts to engage with the job listings, company profiles, and the recruitment content. At that point, they may follow the company on social media or maybe subscribe to job alerts on their career site. Next, candidates apply for the job, submitting their resumes and other required documents. This is typically done through companies' ATS, but can also be from a short form landing page or something similar. From there, recruiters review applications, conduct initial screenings, and shortlist candidates based on qualifications. And then those shortlisted candidates undergo interviews, assessments, and other evaluations to determine their suitability for the role. Then after that, an offer is sent over to the candidate and ideally accepted. Seems simple enough, but as Josh moves to the next slide, we see that that's not quite the case. So there's no longer a linear path as a candidate moves along their journey, which is why it's important to diversify your strategy based upon target market data and the roles looking to be filled. On a daily basis, companies are fighting for candidates' attention, so knowing your audience and where they frequent provides an opportunity to engage them with quality content that can peel back the curtain on what it's like to be a part of your organization, pushing them further down funnel and that much closer to the hire. Next slide. So I'd be remiss if I did not touch upon the importance of organic. First and foremost, it's a free way to engage with candidates. But when paired with paid media, it ensures that the company's messaging is consistently seen by a large and more diverse audience. Organic posts build credibility, long-term engagement, and brand, while paid media can boost visibility instantly, especially for those urgent hiring needs, boosting overall performance. A great exercise to do when you're posting organically is to be mindful of your top performing content and ask yourself, why did this post do better than the others? If it's video content, maybe there's a snippet that really resonated with your audience, so don't let that content die there. Splice it up and repurpose it to create more targeted content that can be further leveraged when running paid ads. This repurposing of content will not only set you apart from your competition, but will also create more of an impact amongst potential candidates, both in the short and long terms. Next slide. So qualified candidates live at every stage and can be engaged throughout each type of campaign. So when forming a strategy, you need to ask yourself what your goals and objectives are and where along the funnel is the best place to engage with that audience. Thinking back to the candidate journey slide, the recruitment landscape is vast. You don't want to rely solely on one tactic, but you also don't want to spread your budget thin and potentially underperform amongst said tactics. This is why you need to find the right blend of platforms that are going to keep the candidate engaged along their road to the hire. Go to the next slide. So this leads me to the importance of having a diversified approach to your strategy. Different candidates frequent different platforms, so using multiple channels ensures that job postings reach a diverse pool of candidates, in turn increasing the chances of finding the best fit. Paid postings can boost visibility in competitive job markets, ensuring that the job listing is seen by more candidates quickly. Not only that, they typically offer options that help in attracting candidates with the right skills and experience. While organic postings like those on social media or company blogs can reach candidates who are already genuinely interested in the company. That consistent use of organic channels helps in building the employer brand, and brand is literally everything. So engaging content like employee testimonials and company culture highlights can attract passive candidates who might not be actively job hunting or even aware of potential opportunities at your organization. Lastly, most companies don't have a blank checkbook when it comes to their recruitment budget. So balancing paid and organic strategies can optimize overall costs. Organic postings may take longer to yield results, but again, they're free, while paid postings can fill urgent vacancies faster. So understanding how to layer them together will provide higher levels of ROI. But to the next slide. So bringing this all full circle, leveraging labor market insights, as my colleagues reviewed in the earlier slides, is step one. Analyzing market data sheds light on trends such as in-demand skills, salary benchmarks, and candidate availability. This information is vital for creating competitive strategies. That data can reveal which recruitment channels will potentially yield the best candidates along the funnel. This helps in allocating resources to the most effective platforms, improving the efficiency of your recruitment strategy. And as you start leveraging tactics, tracking metrics like click-through and completed app rates provides insights into candidate behavior, which helps refine the strategy even further by highlighting what's working and what isn't. Those same performance metrics allow us to monitor KPIs such as cost per hire, time to fill, and quality of hire, and ensures the recruitment strategy aligns with the business objectives. I can't stress the importance of data enough. So both at the market level and platform level, data enables continuous improvement by identifying areas of the recruitment process that need enhancement. Regular analysis and adjustment based on data ensures the strategy remains effective and adaptive to the changing market conditions on a month-over-month basis. So all in all, the candidate journey, it can be a long and arduous one. It's our responsibility to serve them with quality content around every turn, bolstering their decision to join your organization. Creating multiple touch points along the stages within the funnel and throughout the top performing platforms allows us to do just that. But we always need to be mindful of best practices and ensure that posts are authentic in nature and allowing your brand's identity to shine through. With that, I'll open it up to some questions.
Sounds good, JC. Thank you. I do think we have a couple of questions. So one question is there any data about the information sector? And so the question is, it grew slightly a couple of months ago, dropped last month. Is it still on the downswing? So the information sector, I think the number was basically completely flat. It was almost at zero this month. So there's at the moment little growth compared to a year ago. Employment in information communication is still slightly down. It's probably because in 2021 and 2022 there was so much hiring that like a lot of companies in the sector kind of like overextended themselves. So last month has been pretty flat and quite stagnant over the last 6 to 12 months actually. And so it's related a little bit to this broader trend we are seeing. If you look at job postings as well, job postings have declined actually much more in like white collar occupations than they have in blue collar occupations. And so this trend we can also see then being reflected in CPAs and cost per application. Maybe Josh wants to kind of like make that connection and talk a tiny little bit about that.
Yeah, thank you, Julius. For cost per application, yeah, I touched specifically on software developers. That was where we've seen the most substantial increase in cost per application. But most of the other tech roles, technology roles, which is where most of the information roles fall in our job categorization, are a little more flat. Maybe moderate, slight growth, but certainly not to the level of those software developers.
Thanks. Maybe also to talk one more time about this one point I wanted to make. People might ask, okay, we've seen like job growth, continuous job growth, but why are CPAs across all sectors actually declining a lot? And so I think what we're seeing right now is that the US economy is still adding jobs, but the vacancies, the number of job postings are declining. And if you look at job-to-job transitions and hires, that is normalizing as well. So for example, last year, 3 million jobs were created, but 60 million people were hired, roughly 60 million people were hired. So most hires are actually job-to-job transitions. So right now we're still adding jobs on a net basis, but the number of job-to-job transitions has fallen quite a bit. And that's why CPAs are actually declining across the board. And then, of course, there are also sectoral differences. Do we have to, or Josh, do you want to elaborate on that quickly as well? And I'll see whether we have like any more other questions.
Yeah, honestly, I think you covered it really well. I think for me, we talk about it, you know, on your second slide there, but there's always this component of labor supply and labor demand. So we can look at job openings, but another really important component of it is the number of people in the workforce. If there's people, you know, actively looking for work, obviously that's going to help lower CPAs. You know, there's less competition in the marketplace. But you know, if there's not, typically there's a larger gap there, and of course that would increase cost per application conversely.
All right. Do we have, I'm not sure. I don't think we have any other questions for now. Let's see if you're able to. In private duty nursing. If you're able to, okay, so looking into the healthcare sector, somebody's interested specifically in hospice and private duty nursing. Yeah, so I don't have any particular data right now on within the healthcare sector on these specific occupations. We can reach out to anybody who has more questions also later on. Josh, I don't know, did you specifically have data for nursing? I think you presented some CPA data, right?
Yeah, it's funny actually this got mentioned because home health aides specifically, so not nurses, but the aides were the one outlier in the healthcare sector that I was looking at. So they actually saw like a 5 to 10%, I'd have to look at the exact number, increase in cost per application. So we're the outlier, but home health actually is still increasing in cost. And I'd have to look at the nurses specifically.
All right, sounds good. I think we are already a little bit over time, so I think with that we'll probably finish this Appcast brief. And just feel free to reach out to any of us if you have any follow-up questions. If you think about anything else, just write us an email or reach out to us over LinkedIn. And I think with that, we can, yeah, we'll say goodbye and thank you to everybody who was joining today.